Good evening, ladies and gentlemen, and welcome to tonight's SMSF Club Mentoring Client Webinar. Tonight we're going to be covering precious metals, namely the portfolio benefits of investing in gold, silver, other precious metals, and how you can actually go about buying allocated precious metals using your self-managed super fund. Like all investments, it's not so much harder to buy using a self-managed super fund, but there is certain obligations and compliance circumstances that you need to consider. As always, look, we need to go through a disclaimer. Tonight's presentation is what's referred to as general advice. That is, it's for the purpose of education only. And that's our ethos here at the SMSF Club. Our job as a company is to give you access to the right information at the right time so you can make an informed investment decision about what should become your biggest asset, that being superannuation. When it comes to a self-managed super fund, I'm not a believer in outsourcing the investment obligations to so-called financial planners. I think it's called self-managed for a particular reason. That is, as trustees, you should be making the investment decisions yourself. But it is unfortunate that there's over 500,000 self-managed super funds in the marketplace here in Australia today, over 1 million trustees. And I think a lot of them aren't educated or informed. And that's where the SMSF Club came about. The SMSF Club was born to provide ongoing education and to fill the gap in the marketplace to ensure people are compliant and hopefully making better and more successful investment decisions with their self-managed super fund assets. We're licensed through RM Capital. RM Capital hold the Australian Financial Services license. Tonight we're joined by a gold expert that's worked in the gold industry for the last 10 years in the commodities industry and developed a really good IT platform that we'll talk about in a few moments. He's going to go through a bit of the past performance of precious metals and why it should be considered as a component of a self-managed super fund portfolio. It's important to point out that past performance is not necessarily an indicator of future performance. So just because it may have performed well over the last 15 or 20 years doesn't necessarily mean any asset class is going to perform exactly the same way into the future. So look, here at the SMSF Club, our mission statement is that you actually don't need a financial planner. What you need is a financial education. And look, we are all licensed as financial planners, but our job is to ensure that you make the right investment decisions, and that is through the education format, because we're a big believer in investment knowledge pays the highest interest, just like Benjamin Franklin most famously said. So look, the precious metals webinar tonight, I met Jeremy and was introduced to Bullion Capital almost, 18 months, 2 years ago. To give you a bit of an idea about their background, Bullion Capital basically facilitates the investment and ownership of precious metals for investors, not just here in Australia, but around the globe. Now, ABX's Allocated Bullion Exchange has put together a IT trading platform called MetalDesk. And the SMSF Club, in combination with those two, have been able to launch the MetalDesk platform to self-managed super fund trustees. And I'll have Jeremy go through the MetalDesk platform, which is an easy, transparent way that you can go about investing in allocated precious metals if that's what you want to do. They also look after the storage requirements, which is a key consideration when you're a self-managed super fund trustee. It's not just a matter of investing, it needs to be stored in accordance with the SIS Act. So there's certain restrictions and limitations around that. You look at the MetalDesk platform being a joint initiative between ABX, the SMSF Club and Bullion Capital. It gives you the capacity to buy precious metals. Now they're mainly gold, silver and platinum. The trading platform is quite easy and I'll have Jeremy go through that after he talks a little bit more about precious metals as an asset class and why you might want to consider it as a part of your portfolio. To give you a bit of an idea from Jeremy, I think that photo must have been taken 15 years ago because he does look a little bit older than the 15-year-old schoolboy in that photo. He's the head of trading at Bullion Capital. He's been working in financial markets for the last 10 years. He's worked very closely as a part of Bullion Capital, also the Allocated Bullion Exchange, to develop the Metal Desk platform. So Jeremy, thanks for joining us tonight.
Thanks for having me, Justin. It's a great intro. Appreciate that.
Well, what I do is, sorry about the photo. I'll pass over to you to go through the gold story. As look, many of our listeners know, I'm more of an equities specialist, and commodities, precious metals isn't my expertise. That's why we've got you here. So I'll pass over to you as our commodities expert to go through for the next half an hour about why people should consider buying precious metals, how it could potentially fit in their self-managed super fund portfolio, and then how they go about investing in precious metals in the future.
Thanks, Justin. Welcome, guys. Thanks for listening in. I guess just to give you an overview of what we're going to talk about today, I thought it'd be best to give you a quick overview of the market as a whole, the main drivers, how that would relate to your portfolio, why it would make sense in a self-managed super fund, and then not just to be one-sided, but what are the methods of exposure? We're going to typically talk about mining stocks, futures, ETFs, or physical bullion, which is what I'm an advocate for after being in this industry for a long time. Are we able to, Justin, are you controlling the... Perfect. So look, the agenda for tonight, I'm going to go through that overview. As I said, we'll look at the key market drivers, talk about the role in a portfolio. We'll look at some of the stats around bullion performance, and then how to invest, and then obviously Metal Desk and how that could be a good solution for you guys potentially. So as a whole, you can see that the market size globally for alternative assets is quite small. It's sitting around 5%. It's a lot of money, but is all tied up in our fixed income and our equity markets. Now, these are great asset classes. I myself hold a lot of shares, and I also hold some alternative investments, and gold is one of those. I think 1% is probably a bit of a low allocation for our global market, considering this is an asset class which backs up our governments and stuff. Now, looking at the fact that it's only 1%, if we can go to the next slide, you're going to see that the market as a whole trades at about US 200 billion a day for gold. So while it's only 1%, this is a very actively traded asset class, and it's for a number of reasons. As I said, the central banks who've been net sellers through the 90s have now turned around to be net buyers. We also have a lot of trading in the FX markets, as well as the industrial demand and jewelry, and then down to the bullion dealer level. So the way that we actually go about trading physical, because this is quite a different market to what you see in the paper markets, it's quoted daily, twice a day, by the London Bullion Market Association in partnership with their member banks. So they will quote a spot twice a day, and that's what we call the paper market price that you'll see on the news every night. And all these other markets are sort of based off that fixing. So we've got futures, which obviously the producers will use to hedge out their positions when they're mining, so they don't have that risk to the gold price as well as their business and equity risk. And these trade very much, this is part of that 200 billion trade a day. Now, down the upper end of it, we've got these bullion dealers. You get bars and coins trading at a premium to what we call Loco London. So Loco London is the gold fixed price, and we trade at a percentage above or below spot. And that's because when you're dealing with a physical bar, there is a refining cost, there's minting costs, and obviously as we transport this around the world, there's a cost of transport. So it's just important to realize that there is quite a different few dynamics going on once we start talking physical metal. In terms of the market drivers, you can see there that we've got the currencies. Gold in its truest sense is a currency, but it's also a commodity. We'll look at the macro and supply demand sort of features which play out in it. And you also want to look at what investment demand has been doing over the last couple of years. Inflation obviously plays a role, as well as the geopolitics and the central bank buying and selling. So without further ado, we'll get into it. Now, one of the first things to notice on this chart that I'm showing you guys tonight is that the gold price, as you can see, since that period over a 10-year timeline, has really shown kind of a negative correlation to the US dollar. Now, we move on to the next slide, you can see that gold is quoted primarily around the world in USD, even though here in Australia we like to quote it and trade in our own currency, and that happens all around the world. So gold price has been set in USD as they are the dominant currency, and it's just the way it's been since the Bretton Woods and Nixon floated the US dollar unpegged gold at $35 an ounce, where it went up to 1800 and around 1300 where it is today in US terms. Now you're looking at a few explanations. Yes, it's a currency in its truest sense and it's negatively correlated. So one explanation when we're analyzing the market, we go, well, if the dollar's rising, we would expect gold to sort of fall. But at the same time, it's a commodity, so it has a weaker dollar will make gold cheaper, and that also increases the demand, which keeps it up. So it's a hard one sometimes to analyze completely. If we go to the next slide, you'll see that I've also put in a correlation with the Euro USD. This is a key currency pair that often when I'm analyzing the market, I'll look to see you can see there that correlation is nearly 60.65. And if we go to the next slide, you'll see that it follows it again over that 10-year horizon. So it's just an interesting sort of fact to look out for sometimes when you're trying to analyze what the market's doing. Now, looking at the demand figures, these have been taken off a Reuters and GFMS. They do some great research, but you can see that there's a couple of sectors in the red box that I've tried to just hone in on. Obviously, we have supply that's been a trend in increasing over the last 10 years, but one of the key things is where the net official sector in 2010 turned around to be net buyers again. If you go below that, you'll see the retail investment has been increasing steadily from 429 tons to up around 1,100 as of last year. And again, ETFs, which is these exchange traded funds, that's a way to buy precious metals and trade it like a stock, except you do not have ownership of it, you cannot take delivery of it, but we'll get into that stuff later. It's just important to note that that was really well, and then in 2013 those went quite negative, and they've turned around this year with, I guess, the uncertainty in the geopolitical environment with Brexit and the US elections. Going to the next slide, I just wanted to point out a couple of things when you're analyzing. The story in precious metals over the last 10 years has really been about the Asian growth story. It's a long-term trend as the middle class in China and in other parts of Asia have sort of started to rise up. And precious metals is one of those asset classes which they understand intimately. And you can see there by that graph that they're actually controlling the majority of investment in regional physical bar investment in tons. So it's pretty staggering. If we go to the next slide, you'll be able to see the fact, it's just sort of, I've drawn this line across the chart. You can see that Asia pretty much dominates the precious metals investment. It's a global story over the last 10 years where there's a repatriation from the west to the east. So if we go to the next slide again, the physical flow of gold has moved out of these major trading hubs such as London and New York, and it's moving its way through various channels into Asia. One of those for London is Switzerland, and you can see there that in Bloomberg's quoted that in 2014 that Switzerland sent 80% of its bullion exports into Asia in January. It'll make its way into Hong Kong predominantly, but also through other channels where the central banks are buying and the middle class is wanting to buy physical bullion as they become more wealthy and want to diversify their wealth. So another key factor in this story when we're analyzing the gold market is what's happening in the jewelry market. It's a different here in the West where we think of jewelry as just an adornment and something to buy. You know, maybe once for your wife, a nice ring and a few things. But when you go to Hong Kong and you want to buy, let's say, a gold ring, they're going to ask you, do you want to take today's spot price of gold, or do you want to come back when the ring's finalized and purchase it that day? Do you want to take the risk in the open gold market? It's never just a set price because they understand that physical precious metals is an investment and as well as it's an adornment. So that makes up 50% of global demand, and again, Asia is the predominant story. So it's a key thing to look at when we're analyzing the markets. I've got a graph on the next slide here just to quickly, I guess, visualize the fact. You can see there that that's the main story. They are Asia, including India, and during the monsoon period in India, it's phenomenal the amount of volume that they do comparatively to the rest of the world. So we'll move on to the investment demand. I think it's bullion in Australia is typically been an asset class that's sort of sat on the sideline as it does around the world. But this survey I found from Dukascopy, they sent out a survey and looked at, for a 1-year allocation, what would you want to hold? And their traders came back saying that precious metals, and what I found really fascinating was that Australia was 41%, Asia was 43%, and globally gold was the favorite there. So it's interesting. But if you go to the next slide, we'll analyze the demand trends in physical bar investment, and you can see that this really has been a trend over the last few years with the gold price increasing, having a great run. People from 2006, physical bar investment has gone from 237 tons up to 847. The ETFs were such a popular instrument, and they still are, and it's always a good thing to keep an eye on their inventories, because this really tells you where smart money is going and what they're doing. And they've heavily invested all the way up through the 2000s, up to 2012, and they've unloaded for those 3 years. And I can tell you now, in this year, the money has really returned into ETFs. It's been some of the phenomenal. Looking at the demand trends a bit further, I've just put in a few graphs to kind of demonstrate around the world. You can see these trends. If you're looking, China is the largest physical bullion market, but they're also the largest producer and consumer of precious metals. So everything that they're producing, they are keeping, and they're also buying all our precious metals as well as metals from around the West. Everything they can kind of get their hands on. Now, when we look to Europe, a few nations there have started to change, I guess, the way they invest. And I think Germany's a pretty good example there in the light green on this graph. They've really stepped up since the GFC their precious metals investment, and I know that a lot of German families will hold physical precious metal, along with Switzerland and other parts in Europe. It's just a sort of global trend. When we look at the Middle East, there's always been quite an affinity to precious metals. It's somewhere, again, like China, where they understand this as an asset class, and they have a cultural affinity to it again. They have remained steady. It is above 20% above the 5-year average, but again, it's just to show you guys that the demand trend throughout the East and Asia and also parts of Europe has really grown with the uncertainty, I guess, since the last GFC, and I guess a lot of mainstream investors looking to get a return or at least limit their downside for those negative events. So I guess what about production in terms of supply and demand? You'd think that if production or exploration of mining companies sort of stops and there's not as much gold coming onto the market every year because we consume a lot and it's all going to the East, that would potentially, in any other commodity, shoot the price up a lot, right? But I guess in the gold market, they've got that stat there of over 95% of the world's gold is held as a store of wealth. So there are a lot of large reserves, and Asia is really price sensitive. So as gold comes up, they will start to take a bit of profit with their gold, right? They've done well and de-risk themselves from one asset class. So it's just an important thing, I guess, to remember when you guys are trying to analyze the precious metals market. You need to keep in that it is a currency and it is a commodity, and you need to be aware of, I guess, the different factors and the way it might behave. Going to the next slide, inflation is also a key component, I guess. Gold does well in a high inflation environment, but it also seems to do well in a low inflation environment. It's just traditionally been seen as that hedge against fiat currency. And I guess that's one of the defensive risk asset why people keep it in their portfolio. Talking about, I guess, the geopolitical side of it, it really is. I mean, you can see that stat there with Brexit. The gold price had a 9% jump within the day. I've just put this other graph in I saw this afternoon because it's quite interesting. If you look at the ETFs in the dark green, as I was showing you, they've been basically negative, and coming into this year, it's really shot up. And I guess that's that institutional money. When you're trying to analyze, you're thinking about who's doing this sort of stuff. That is the institutional money, and a lot of retail investors made up. With the uncertainty, decide to weight their portfolio slightly stronger in precious metals because it will perform in that environment. And with the US election coming up, I think there's just a lot of uncertainty in the world at the moment, and that can be a really good play for precious metals. Again, I've put this in. That's the key one I saw this afternoon, where 120 US billions almost come into ETFs over the last sort of quarter. It's a big net inflow considering you saw the last couple of years where bullion's sort of been going a bit sideways after coming off the highs after the GFC. So I guess it's just something interesting to note and keep an eye on when we're looking at the precious metals. It just shows that political uncertainty is back in the air. There's just a lot of uncertainty in the markets, and people are looking for asset classes that will perform in those times. Again, along with this theme, the central banks, it's quite interesting. Through the 90s, they've been net sellers of physical precious metals. They hold that obviously to back up their reserves. Around 2010, we see them start to buy a bit more, and they've been net buyers ever since. On the next graph, I've just tried to visualize that a bit more for you guys. You can see the gold price going sideways there through the 90s, and they were just selling down their holdings, their reserves, and since the GFC, they've all turned to be net buyers again. So obviously, you can see on that graph that where their holdings are was nowhere where they were. We're holding a lot less precious metals as nations, and I mean China and some of these other sort of Asian countries are really starting to take that west. It's that story of moving from the bullion moving from the west into the east. So guys, that's kind of it, I guess, just from a way the major things that I look at when, I guess, analyzing the precious metals market. That stuff's interesting, but I guess as well, like why would you want to hold precious metals in your self-managed super fund? I mean, what role does it have in as an asset class in a portfolio? And I've done my master's in finance, and I've been through university, and it's just not taught here in Australia. It's not something you see. And when I've been traveling overseas with ABX and also Bullion Capital in the East, and going and visiting banks and financial planners and stockbrokers, it's a different mindset over there, where they understand that it has a role in a portfolio, and it's an asset class that's highly liquid. It diversifies your portfolio, so it has a role, whether that's 5% or up to 20%. That's really personal preference, and I guess waiting on your analysis of the market. So as you can see there, one of its main benefits is the risk management tool. I said diversification before. The key concept of that is this: you want to get a risk-return ratio. So for less risk, you want to get a higher return. And that's what a weighting into gold or silver can help you achieve. It has that tail risk protection for those sort of economic crises that come along every now and again, such as the GFC, but also more everyday sort of market fluctuations. It just gives you that protection. It's a highly liquid asset, and if it's held in physical, it's one of the truly liquid assets that actually doesn't have a creditor and liability relationship attached to it. And I think that's what makes it so unique. Obviously, as I mentioned before, it helps in those extreme inflation situations, and it also protects against your currency. You can choose to trade this in US dollars, or you can choose to diversify and trade it in your Australian dollars, and you're going to get exposure to currencies with that. So I guess one of the other questions we get asked a lot is, well, what sort of allocation? And I think that's really personal preference and what you're seeing in the market at the time and the level of uncertainty. Um, you know, I guess through my analysis, I've watched the trends to be that there is a trend to the west when there's uncertainty. There's a lot of figures that need to add up, and that will turn the market into a bull market again. But it's trying to figure out the allocation. I will leave it to these academic studies that we've done a report on this. There's over 300 studies that were analyzed, and the holdings came back as in 5% up to 25%. Personal preference. It is uncorrelated to other asset classes, so it's just a nice play to put in your portfolio. When we talk about the performance of bullion, gold, I mean, as you can see on this graph here in a number of currencies, but we'll look at the US and also Australia. Everyone says it's not, you don't buy gold, it's sitting in your portfolio as a risk management tool, but it's had great returns. Average 9% return in Australian over the last 15 years, and if we pull that back further, the performance has still been really good. So there's been a lot of upside to having a small part of your portfolio in a liquid asset that's had great returns. Silver tends to mimic what gold does. It's a lot more volatile, so if gold's going up, silver will go up as well. You'll see it typically overshoot it, and when it goes down, it'll typically overshoot it again. So it's more volatile, but basically that follows gold a lot. Again, that's had phenomenal returns. If you look at what you've been getting in the bond market, or if you've got to put in 10 to 20% of your portfolio on the side, which is a risk management tool for when the GFC hit and correlation nearly ran to 1, precious metals were still going up. You can see there in 2010 I had a 58% run in Australian terms. So, that would have been great for your risk management in that year. It would have offset a lot of your losses that you had in your equities, your property, and cash and bonds. So I guess one of the things as well is, well, how do I get exposure to gold? I think it's fine to go and invest in these asset classes, but it's just important to understand what their role is. What do they do in your portfolio? Futures is an interesting market. It's something that the miners will use to hedge out their positions. Large hedge funds will trade that market, and they 90% it won't take delivery. It's just a way of hedging a tool or getting exposure to the gold price, but it has counterparty risk. Mining stocks, again, I've just come back from the gold symposium in Sydney, and I can tell you that there's lots of companies out there doing a lot of exploration, and when they make it, their returns are phenomenal. But in terms of getting exposure just to the gold price or the silver price, there's a lot of business risks. They can drill these mines for years and run into problems or not find what they were looking for, or then when they finally do get into production, often there's more problems or management can stuff up. So it's a business, and it has management risk, it has business risk, and it has equity risk. If you looked at the way some of the gold stocks performed in 2008, even though the main commodity gold was shooting up, their companies were losing. Their stock price was plummeting. They may have made some decent recoveries, but it's just not true exposure to gold, I guess, in that sense. So it's important to realize what you're getting into. Exchange traded funds, ETFs, again, an excellent vehicle. It's just understand the counterparty risk is attached to that. Now, when we talk about physical metal versus paper, that's, I guess, the paper metal, we have an unallocated, which kind of sits on the paper. You have counterparty risk. You do not have that legal title held in your name, and that's the key word, I guess, allocated, when we're talking about physical. That's something you always want to be aware of, and if you're storing it with a provider or purchasing, and you want to know that you have that allocation if you're after physical. On the next slide, look, this is just the COMEX gold leverage ratio. I thought that was a very interesting graph, and there's a video there by on Kyle Bass, who works for Heyman Capital. I'll let you guys go through this in your own time, but I guess one of the key concepts here is the fact that they had over $80 billion worth of contracts, and they looked at the COMEX gold, what they could deliver on if things were, I guess, to hit the fan, and they had 2.7 billion in deliverables. So let's imagine not only they want to take delivery, but all these other hedge funds want to take delivery. That's good. They're not going to be able to get their gold. So that was, I guess, the catalyst for that fund going out and buying physical as opposed to a futures. Looking at the next slide, we'll talk about ETFs. These have been a fantastic vehicle. I do think they're excellent. You know, in 2004, the Spider Gold Trust was launched, and it's, I guess, the key concept behind it was to really get past a lot of the problems of trading physical metal in terms of, hey, we have to, you know, get buzz, go to a bullion dealer, you have to store it. There's a lot of, you know, it's an old style system that we're not used to that in, I guess, today's age, where we want to be able to hit a platform and get exposure to the share or asset that we're trying to attain. Look, it's done well. Again, I just want to touch on the fact that it isn't allocated. As an investor, when you purchase that, you're purchasing a block in this fund, which will back it up with precious metals, but there is business risk, again, attached with that. You are not able to take physical delivery at any point in time. So I guess it's just important to understand what asset class you're trading. With that, I want to move on to sort of tell you what the MetalDesk solution and platform is. As you can see in this graph, this picture here, it's an online trading platform for physical precious metals. It's been developed over the last 5 years in collaboration with Allocated Bullion Exchange and Bullion Capital. It's a trading platform that really has, I guess, embraced the modern age that we're living in and tried to bring the old world of bullion into the current market. We want to be able to trade physical, but be able to settle it in real time. You want to be able to get, I guess, the equity-like spreads. I'll touch on that a bit later. And I guess that cost of execution, that cost of trade. Physically, trading bullion has been very costly in the past, and I guess that's why ETFs were invented. But you can see here in the fee comparison chart, I guess I've tried to break down typically what you're going to get. So when we say execution fee, I was talking transaction, a buy-sell fee. So when you want to buy bullion from a mint or a bullion dealer in physical, they're going to quote you again that 4% or a percentage over the London spot market. Now, if you're going to buy that, they may have a storage solution. Again, you'll get charged for that. It's a physical asset. But let's say you want to sell it in 2 years' time. They're going to quote you a percentage under spot or, you know, above spot, depending on what product it is. They trade differently, the coins and the bars, but it's a much higher transaction cost overall when you add everything up. And I guess that's what ETFs really tried to break down and why they've been so popular. And MetalDesk has again gone out and done the same thing through efficiencies of scale, as well as keeping everything in an online ecosystem with physical precious metals that has been vetted. We've really standardized the product. So you can see that the transaction fees are 1% comparatively to 1.5 or a bit lower depending on the thing. The spreads on a kilo bar, I can tell you, are very extremely tight, and we've been able to achieve that because it's the volumes going through, and I guess the people trading against each other. You can choose to buy and you can choose to sell, and there's market makers on this exchange who will buy back from you. In terms of storage, you can see that it's charged at 0.8 on gold. It's a lot more condensed, easier to store, whereas silver is at 1.3%, just purely based on the size. It's not as dense as gold, and it takes up a lot more space in vaults when you start to fill a vault up. That percentage is billed per annum, but it's billed monthly in arrears and calculated daily. So if you were to hold your metal in the vault for 30 days, you'd be billed a fraction of that 0.8% per annum. Look, the exit fees are there. I'm not going to run into that because I know as a self-managed super fund, that's not something potentially that you want to do. You want to be able to sell it, and we do see less than sort of 5% actually taking physical delivery, typically at our Bullion Capital and through some of our brokers, just purely because the system does work. We see guys come in, start to do trades, potentially take delivery, and then once they trust the system, they want to store it somewhere. They want it to be insured. They don't want to bury it in their backyard or paint it black and use it as a doorstop anymore. That's not the age we're living in. And I guess that's why this platform has come about, to really solve those problems. So I'll go over the features just really briefly. I'm going to give you guys a platform demo after this, so I'll run through it. But it shows you the market depth, which is quite cool. You'll be able to see the contracts that are in there that people are really trading. You can create watch lists, so focus on key products that you'd like to purchase or you're watching. It's got trade management tools. As a self-managed super fund, this is really good. You've been able to see and obtain financial reports, be it for tax return, can easily be sent to your accountant or advisor. You can manage it yourself very well. You can manage your holdings. You can choose to sell them, and it's access 24 hours a day to all that kind of stuff. And to trade metals, you can trade 23 hours a day, 5 days a week, and you can choose to trade globally or in Australia in AUD terms in Brisbane, and as well as Sydney for vaulting. So moving on to the next slide, I will just quickly rush through this, but it's, I guess, the setup of how this has come about. With MetalDesk, it was about getting a lot of liquidity, not just on the retail level, but at the institutional level, and standardizing the product, as I said before. So we've had refineries being able to provide liquidity to the platform, and we've been able to go out and offer that to financial services, typically people who weren't able to purchase bullion easily without getting visiting a bullion dealer, which is quite a unique experience. I can tell you, you'll get buzzed through a number of doors, show your license, take your bullion and put it on your jacket and go home with it and bury it. It's really trying to bring that asset class into the future, and we've been able to do that through this structure and ecosystem, where you're able to get access to sort of institutional trade as a retail investor, and store it and trade in these global locations around the world and manage your holdings online easily. So the next slide just kind of shows you the vault locations, or the trading hubs as we call them. We call them a trading hub because they all operate as independent markets. Brisbane is also on this. This is the global view, but Brisbane and Sydney, you can trade physical precious metals in AUD, and in Sydney you can trade in USD, and then these global hubs are all in USD. It's the global denominated way that precious metals is traded, even though it's traded in local markets. So there's demand dynamics in each one of these markets, and you're able to take physical delivery. So if you purchase metal in that hub, you will need to sell it back in that hub, because it is a physical product that's being shipped to that location. So you're selling in that local market, but there are market makers on these exchanges who will guarantee a buyback at any time, as well as the best price. If there are people out there wanting to trade, they will go to top of book and they will get hit. So you can sell your products back to the market. You can do market orders or limit orders. I won't get too complex, but there's quite a few features available as far as you want to take it, I guess. So I guess the big thing with physical is the vaulting and the storage and that allocation, as I mentioned before. So all the bullion stored in the MetalDesk ecosystem is allocated and unsegregated. So because we've standardized the product and we're trading these LBMA, or we have a good delivery list of refineries around the world that are trading kilobars that are 49, which stands for 99.99% pure gold. We don't mind if they all get stacked up together. We don't need this bar to be yours and this bar to be his, because it's all stored together, and that really saves the cost. That's how you bring it down to be a cheaper product. But every one of those bars is allocated. So if there's 30 bars in there and there's 30 investors, they're all allocated to those investors. It doesn't matter that it's being stored with one of these vaulting partners that we utilize, or that you've come through a broker or thing. If you're trading on this exchange, every one of those is allocated to the end client at all times. And in the event of a financial collapse or the vault provider going down, no liquidators can step in and sell that or do funny things with it. It is always in your name, and they would get in touch or contact and organize delivery. So moving on, I guess another important aspect of this security and this triple-layered security mechanism that we've got in place is you want to know that it's audited, that what is on the platform says it's in the vault and is in the vault is what it is. So we get independent audits. At a minimum, a dual annual audit of the stock take from BDO and also DKM in here in Australia. And we'll get inspected, the bullion, it'll get inspected by a company called Inspectorate, where they can do scans on the bullion to make sure that no one's tampered with it. All the bullion coming into our system is coming from very reputable refineries or dealers, and once it comes in, it gets inspected, and they will take random takes on samples. So again, I don't know if this is as relevant, but it's worth just running through, and I will do this on the platform. I can quickly show you guys. You're able to take physical delivery of the metal. You can pick it up at our vaults, or we can arrange delivery, and we would just pass on the cost associated with that. But you can do that via the platform. You can request to have your metal delivered, and it's generally just a matter of notifying the vaults and allowing you guys to go out there. They generally don't publish their locations online, so it'll get organized through us. Before we jump into the platform, I guess I'll just give you a quick summary of why it's, I think precious metals is a unique investment that offers, benefits to a self-managed super fund. I mean, not only on the diversification, but I think the other key aspect is that it has performed, that 9% for 15 years in a row, that as a defensive asset, I mean, it's why you'd hold bonds or cash. This will do probably a better job at being a defensive asset, and it has returned really good returns. Through the partnership with the Self-Managed Super Fund Club, you guys are able to get access to physical. It's stored in world-class vaults. It's allocated. It's easy to, the same way you'd log in and buy BHB, you can log in and buy a physical bar of gold or an Australian kangaroo from the Perth Mint, the Royal Mint. It's secure. These vaulting providers are some of the biggest in the world. They specialize in this. It's a very efficient platform to trade in. This execution is immediate, fractions of a second, and the technology behind this platform, I can tell you, is pretty fantastic, and the liquidity is there. This is not an asset class where you're going to buy and have trouble selling this. These bullion brands are recognized around the world. If you could take delivery and sell it off market, or you always can sell it guaranteed back to the market at a very tight premium. So guys, that's kind of it from me, I guess, just in terms of the gold market. I hope that was insightful in some way.
Yeah, look, thanks, Jeremy. Mate, we've got a few questions that have come from around the grounds. One comment that I'd like you to highlight one more time is the difference between physical and allocated in comparison to the other alternatives of gaining exposure to precious metals. If you could highlight that, just go into detail. I know you've touched on it a few times, but I think that's a big difference when you're getting delivery and it's allocated precious metals as opposed to the other alternatives.
Yeah, for sure. No, look, it's very important. I mean, I guess what we call the gold bugs, the guys who really, the doomsday, would really only ever trade allocated, as well as most smart investors, and I guess institutions are starting to switch, as I guess I showed you that fund who switched over, Kyle Bass from Hayman Capital. They're now buying physical as opposed to a future because they want to take delivery of their metal. You can trade paper gold, but it's got that counterparty risk. You'll never be able to take physical delivery of it. There's a thing where you can do unallocated accounts. It's the same as paper gold. You have that counterparty risk of that business, that management team of the market. So allocation is a key thing because it's legal title, which is going to be held by the end investor. And it just allows you that your safe haven asset is going to be there in the event that it's designed to be there, right? It's a risk management tool. And, if there is a GFC or some financial crisis, you want it to be there in that time and know that you can get your hands on it. And that's what legal title by allocation is all about.
And that highlights the reason why the SMSF Club have teamed up with Bullion Capital and ABX. It's one thing, it's very easy to gain exposure to gold as an example through an ETF. But when you do it through an ETF, it's just like gaining exposure to a fund. The main reason why you would have precious metals as a part of your investment portfolio within your SMSF is as a defensive asset. What a defensive asset means is that if global markets crashed and plummeted, where a lot of doomsday day people are suggesting that it could potentially happen, you want to be able to not have counterparty risk. You don't want to have exchange risk. You want to have the certainty if you do have gold as a part of your portfolio that is allocated and physical, that you can turn up in a vault somewhere around the world and take that gold as a form of asset. That probably brings me to one of my questions that I always consider. I think as an investor, I've followed Warren Buffett for the last 20 years, maybe a little bit longer. I always think to myself, what would Charlie and Warren do in this situation? And Warren's actually come out a few times and said that gold for him isn't the best allocation of his resources because it's what's referred to as a non-productive asset. Well, what he's referring to that is that you buy one gold bar today, in 100 years' time, you've just got the same gold bar and you haven't been able to drive any form of income over the 100-year period. For that reason, he doesn't consider investing in precious metals. But I'd be interested in your comments on that, Jeremy, as to why people should consider it despite what Buffett has come out and said previously.
Yeah, no problems. I mean, look, I'm not going to go against Warren Buffett. I tend to agree. I think he's a value investor. He knows what he's doing. And I think, in the past, gold's role in a portfolio is not to be the main thing that you buy. It's not, you don't weight 80% into gold and pray for to get 50% returns year on year. It's not going to have that amazing upside, but it's a risk management tool. It's about lowering your risk-return ratio. It's a key concept in finance, and when you're building a portfolio, I like to think of, when I structure my portfolio, I like to think of buckets, right? Like I have my risk capital, my high-risk stocks, some mining stocks potentially. I'd have maybe some allocation to property, maybe I've got cash, and I'd have a portion in gold. And it's one of those buckets that's it's my hedge. It's my, protects me against those negative events. It's uncorrelated to the equity property markets. And in 2008, I think I always go back to that one just because it was so dramatic, and I guess I was studying at the time and watching this, and equity markets losing 50% and gold's just rising. It's really shining and went to all-time highs. So if it's a part of your portfolio, that's what it's designed to do. It's not meant to be the thing which returns you 20% returns year on year. It's the weighting, I guess, that you'd put in it. And Warren Buffett obviously is very diversified with the amount of industries and things that he's able to invest in. But just the one other point on that is the last 15 years have been great. I mean, averaging 9% returns as a risk management tool, I don't think bonds have done that or cash has done that. So look, it certainly has a role in my view.
Yeah, look, that's a good point. Look, you look at the 1950s, 1960s, 70s, 80s, 90s, even early 2000s. We lived in a very diversified world in that most asset classes were uncorrelated. Since the speed of the internet, speed of travel, I think we've got one global economy. And we saw that in the GFC. Like, it's not just shares that fell. It was global stock markets all around the globe fell at the same time by a huge amount. And that was the first time in history. The same thing with property. Property around the globe fell, including many parts here in Australia. So when you look at the productive assets that Warren Buffett usually talks about, it's those two asset classes, and they fell considerably through the GFC. The only asset class that really increased in value was precious metals, and that highlights their correlation to other markets and why they're considered a defensive asset. Just before you go into the metal desk, there's two more questions. One from Ian on the Gold Coast. He's asking when, with regard to the fees, the brokerage or the transaction cost involved is at the instant that the trade is done, which is the 1%. Then the fee, when's the fee calculated for storage, and how often is it charged?
The storage fee is calculated daily, so it's calculated at close of. It trades 23 hours a day. It'd calculate it in an hour, and it's calculated daily. It's billed monthly in arrears.
So that's
if you were to hold your bullion for
0.8%
per annum, yeah,
and
calculate
daily on the market value of gold, and then
exactly
charge monthly in arrears. Another thing that was an observation from mine, question for you, is that you mentioned that silver is more volatile. I always knew silver and gold were correlated, but I've never made the actual observation that it's more volatile than that of gold. Why is that?
Yeah, it's an interesting one. I mean, silver it's got a lot more industrial use. So I guess there's other demand dynamics playing into that, right? Like gold's a currency and it's also a commodity, and it has uses through technology, but silver really is. I mean, you have a lot of industrial use. So I guess in times a lot of people wait to it. A lot of people want to trade silver as well. It's very popular. So there's investment demand, there's a strong jewelry demand, there's central institutional money in it, as well as this really strong industrial factor, which can play into it and take a lot of silver off the market. So it's just got a bit more volatile.
Excellent, mate. Well, look, that's great. Let's get into it, mate. Let's show us how to trade using the metal desk. I'll make your screen the one rather than my slides. And then looking forward to seeing how we go about doing it directly.
Confirm that you guys can see my screen. I haven't used this platform, so a bit of technical difficulties over here.
Well, while you're doing that, maybe just show them how to log in on the SMSF Club website as a starting point. Is what we've been able to achieve is to basically empower you as a do-it-yourself SMSF trustee. So if you go to the SMSF Club website, across the top banner, you go to SMSF Investments. We tap down from SMSF Investments and gives you exposure to different asset classes that are commonly involved in, that's Jeremy there surfing, they're commonly involved with SMSF trustees.
Yeah, so you guys have, from the Self-Managed Super Fund website, you're able to go through and click on the open account.
Or go up to SMSF Investments again, Jeremy, and just go through and click to show the exact process. So on the home screen, Gold Coast Investments, Precious Metals there at the bottom. Click on Precious Metals. This takes you to just what is the metal desk, why home precious metals within your SMSF. So some of the stuff that we've covered tonight. And down the bottom, you can click to open an account.
So you're going to be able to open up an account with Self-Managed Super Fund Club here, and eventually we're going to get through to trading on the platform. So I guess if that's it, I'm going to run you guys just strictly through the platform. How it works, this is the main trade screen. The two things you'll notice, there's two sidebars on each side. You can set them up to be the market, which this is currently, or your watch and holdings list. I've just got this on watch, because I'm watching a few products. I'm in a demo environment at the moment, so this is just, it's live pricing, but this is a demo environment, and it's got $500,000 to play with here. So first thing I want to do is select my trading hub, Brisbane or Sydney. It's going to change the contracts that you can see. So you can see that we've got a range of bullion bars and as well as coins. So I've got my 10-ounce Swiss, 100-gram bars, Kangaroo. I've also got pooled accounts. These are allocated. It's allocated precious metals. It's like fractional ownership of a larger bar, so you would own, typically that would be like a 400-ounce bar, which is quite expensive, but it just allows you to get into, you know, silver at a really decent price, right? You're purchasing one portion of that larger bar, and that's allocated to you. So the first thing we'd do is we're going to select a 10-ounce bar in Brisbane, and you guys can see that here I'm able to check out the contract specs as well as the high, the low. It's just a one-day trading chart, sorry. And you can see that this is the central limit order book. So here I've got the buy or the bid, and I've also got the sell. So if I wanted to purchase this, I can set it up as either a limit or a market trade. So a market trade is just it's purchasing at the time of trade. So you can see here it's a live market, it's got a tick down, and this is moving. It breaks down the fee structure that you'll get charged. So per ounce price, the 1% execution fee, the estimated tax, and if I submit that order, it will shoot through a trade confirmation automatically. So here you're able to see that this is your, I guess, your proof of ownership, and it's your allocation. It'll also be now in your holdings. Now, if I was able to also go through at the same time, I could set a limit order. If I was expecting the gold price in Australian terms to be somewhere else, I could do a limit order. When the gold price was to reach that price, I could buy it, or I could also sell it. So now that I've done that, I have a limit order in the market here, an open order, to buy a 10-ounce bar of gold if gold falls to this price.
How long does that,
setting it up.
Jeremy, how long does that limit order stay in the market?
That'll stay in until you cancel it.
So
you are able to set a time on that. You can set it for a week or
okay,
you know, a couple of hours. So that's it. So now that I've got a 10-ounce bar, you can see that I've actually got that order's actually come up in here. I've got holdings of one, so I could also set a limit order the other way to say, look, if the gold price was to go to, you know, let's say 1690, then I would like to sell that order. So there you can see that's popped up into the central limit order book. Now everyone else in this environment will see that that's actually in the market. So you're trading against, I guess, the market makers, you know, fellow traders around who are trading in Brisbane. It's all, the key concept to remember is it's always about trading hub. It's a physical commodity. So each market, if we go to Sydney, again, it's different. It's got its own, you know, retail investors. It's got its own institutions trading there and supplying prices. So it's got its own sort of demand dynamics. Now, if we're looking at the reporting side of it, we can see that I have a couple of contracts in Brisbane, a couple of limit orders in the market, so it shows me my position. It'll also show me what transactions that I've done, that I've just purchased a 10-ounce bar. It shows me the per ounce price, and it also, I'm able to generate that PDF if I need that at a future date. I can look at my holdings. I can run reports and generate a CSV file for tax time. You can pull those, or you can generate a full statement of trading for the financial year. We'll just do a quick one to today, and that will run a report for you guys just on your position, what you've traded, what your cash balance is, your profit and loss. There's a lot of information in there. So it's live, so that will constantly be, it's connected to what's happening in the Metal S market, the live, you know, the supply and demand in Sydney. As well, you can see your cash transactions in here. So there's a lot of information to kind of manage your metal and your inventory. It also has a live news feed, so you can keep up to date and just kind of keep the grips on potentially what's happening in the market, right? This is live, it's coming through, so it's changing, and there's lots of things coming in there. Just to run you through it completely, that we do have a quick guide. There's some brochures. Justin's has all that stuff, and it's on when you sign up with him. All that stuff is there. You can send through a support request if you're having any issues. Now in settings, this is the other thing I just want to explain, is you can change your market from Australia. So we're trading in AUD at the moment to USD. Now when I go back to the market, you're going to see, if I select my trading hub, what's going on in my demo? Got a little bug in my demo. But we're able to trade in USD terms now. There's no liquidity in this demo in the USD. Apologies for that. But it's the same principle. So you would select your trading hub, and then you'd look at the liquidity in that market. Well, it seems to have come through. The thing with the internet here. So again, you can add things to your watch list. Sorting, select all hubs. You'll see that now comes up. I can, for quick reference in future, right? I can come over here and switch back. The final thing, guys, is a very simple platform. Is just the cash. If you are transferring money to be deposited against your account, it's worth just notifying. This will come through. It'll also show your credit, as well as you can do that withdrawal of bullion. So I haven't bought anything in the USD market, but if we went back, I could do a withdrawal request on that 10-ounce bar if I was to select Brisbane. This has got my fees here. This is just a demo thing, so we'll ignore that, and I'll go back to Australia so you guys can see the market in AUD terms. But essentially, that's it.
On the chart, Jeremy, can you go back to show a chart that's a little bit longer than 1 day?
No, you can't at the moment. It's a feature I know they're trying to build. They're going to be building in, but no, it's not for. It's just for the intraday chart.
Sure. So it's more the metal desk as a trading platform that gives you how the price of the commodity is traded in that course of the day. If you did want a chart that was longer than that, just to determine when and where you should be buying, that's something that you'd do before you log into the metal desk program. So
yeah,
find those
exactly.
charts
I mean,
anywhere.
You will all over the internet. Down in the news feed, if you follow some of these links, there's generally always charts, there's analysis. I mean, the chart's just there to depict what's been happening. But yeah, that long-term analysis, you can find that all over the internet. It's very readily available.
Excellent. Well, look,
no problems.
I'm conscious of time. We've gone for our dedicated hour. If there's any more questions, we might move on. Bear with me 1 second. I'm going to move back to my screen just to finish up. If anyone's got any further questions for Jeremy, by all means put them into the questions box and we'll attempt to answer them. There are a fair few that have come through previously. So if we don't get to answer your questions tonight, what we'll do is we'll have someone respond via email or contact you directly on the phone tomorrow of the next few days. So look, for further information about investing in gold, we've put together a superannuation guide. It talks about the portfolio benefits of investing in gold and other precious metals. That's a copy of it there on the left. That can be downloaded from our mentoring library on our website. So to get there, you just go into client login, click on client login, it'll give you your password, enter your password, and then you can access not just the superannuation guides, but also past webinars, including this one, which will be uploaded over the next few days. Another book I strongly recommend that you read if you want to know more about investing in commodities and some of the key drivers of commodities, in addition to what Jeremy has spoken about tonight, is the book there by Jim Rogers, Hot Commodities. Jim doesn't just talk about precious metals, but talks about energy and food, soft commodities, as the one of the key, or three of the key investments over the next few decades, with the changing demographics of the global society, moving to feeding the population. Jim Rogers set up the Quantum Fund. We've come out with two investments linked to Jim Rogers' index, the Rogers International Commodities Index. So Jim's known as the gold guru. He's the genius in the gold space. So I highly recommend everyone to read that book. November, it's not via a webinar, our mentoring program. It's actually going to be a live seminar. Like every 6 months, we go around the country just to bring everyone together. It's a great opportunity for you to learn from key experts. We'll be covering the share market, just an update as to how the share market has traded over the last 6 months, and give you an outlook over the next 12 months to 3 years as some of the key indicators where we think the share market is likely to head. We'll talk about property experts in across the country. They'll be talking about the property landscape, also the changing to the SMSF lending platform, what to look out for, and over the next 2 years, key dates that we anticipate certain changes to be introduced for the SMSF lending space. Key contribution changes, again, since the budget, I think there's been 2 or 3 changes where the government has altered their contribution caps, so we'll be covering those, and also different strategies to maximise contributions. One of the big ones is how to, is to determine whether or not paying off your mortgage is a better investment rather than putting money into superannuation. The answer to that question, it does depend on your individual circumstances, but we've put together a pretty nifty calculator where it's quite simple to use, where you can determine which one is the better option for you as an individual. So that's coming up in November. An email will go out hopefully by the end of the week with the key dates in your capital cities. So look, thanks guys for tuning in. It's important when it comes to self-managed superannuation, manage your investments. The traditional wealth creation process, I think, is outdated. You need to take control of your life. You got to work smarter, not harder, and that certainly comes to where your super fund is investing. So on behalf of all our clients, look, Jeremy, really appreciate the work in helping us put together the Metal Desk platform for our clients over the last 18 months, and really appreciate you taking time out of your busy schedule to educate us as investors as to the benefits and how we can go about investing in precious metals. Thank you, Jeremy, and good night.
Thanks, Amy.